Hey, good morning, everyone. Marty Mazzora here, February 22nd, 2024, Thursday, with your end of week stock market snapshot. Clients, this will come linked to an email tomorrow morning as Friday's message. NVIDIA blew the doors off of expectations yesterday. You may have noticed that and the big rally in the major averages as a result today. We won't get into the NVIDIA numbers or my longer term view of NVIDIA, whether it has a moat or lack thereof and so forth. We'll just again stick with the charts and breadth, and we will look at the dollar and yields as well. And of course we'll look at NVIDIA's chart. Wanted to point out breadth this morning. As I talk at you, the Dow is up 250 points, which is nice. It's 0.2%. But notice that as I speak, almost half of the Dow components, 14 of the 30, are actually down on the morning. The S&P has better breadth. 177 out of the S&P 500 and change is, a little over 35% are in the red. Really interesting that the NASDAQ, oh, by the way, the S&P is up 1.5%. The NASDAQ composite is up 2.15%. That's a not small move. All the while, more than half of the issues that are moving this morning are actually down. 1,500 decliners versus 1,364 gainers. So, folks, we're still back to that unhealthy breadth. I think that if AI is really going to be the game changer this late in the cycle, it's going to have to inspire a big catching up of all the other stocks that really haven't done a whole lot over the last year or so. And I pointed historically to periods where this is a big concern. So remains a concern for us. And the Russell 2000, we're going to show you that chart here in a second, small caps are essentially flat on the day. They've pretty much given back all of their early morning gains, at least as I speak to you right here. We could get a big ramp here toward the close. Wouldn't surprise me, as I mentioned in my midweek snapshot, that if we could get a couple of down days in NVIDIA, for example, and you get a good earnings report, you could see this thing scream to the moon, which is what appears to be happening, at least so far today. So, of course, there's going to be many updates to come over the coming weeks. So now we'll take a look at the charts. We'll just go ahead and start with the big mover, and that's NVIDIA, of course. So this is the daily chart, and again, we were breaking down, but again, like I said, this thing could explode higher, particularly if we had a couple of down days. And look at that massive gap that we got here this morning. You were massively overbought. You're right back there. And that's not that unusual. Here we were overbought, came down, got overbought again, and then we consolidated for 6 months or so before breaking out impulsively and with some serious momentum. Of course, as you can see here, you've got some work still to do technically here on the daily chart, but right now you're sitting somewhat comfortably back in that uptrend line. For the S&P 500, we'll start with the hourly chart since that's what I have loaded up here. Again, you can see, we had momentum breaking down here and breaking out to the upside as we've seen here. So again, big gap up today on the S&P 500, which will show on the daily chart as well, of course. And so we never really got the break of the trend line on a closing basis, right? We tried to break, came back, gapped up today, firmly back in this still this somewhat rising wedge pattern. Still have your bearish divergences on the daily. So actually, nothing's really changed in terms of the longer term outlook that's exhibited here on the daily chart. As for the NASDAQ 100, we did break down below the trend line, broke down below the 20-day moving average, but thank you, NVIDIA. We're back up above the 20-day and back into the uptrend here, which finds itself in somewhat of a rising wedge pattern. Still have your negative divergences on the momentum indicators. And then the Russell 2000, as I mentioned, it's flirting with the flat line. Come up a little bit from a minute ago. Actually, it's up 31 basis points. It was only up 10 basis points when I started talking, so things are bouncing around. In fact, let me push this chart back let's say 3 years or so. So for starters, you can see how far off these 2,000 stocks are from their all-time high. I mean, they're still double-digit bear market that this particular index is still in. But look how key this level is right here for the Russell, right? That's where we're sitting right now, folks. All kinds of trading around that level. 2,000 happens to be for the Russell. And then it's been resistance, 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 broke above it, failed breakout, broke above it, failed breakout as we sit here today. And you can see here, although we never quite got there, if we did, these would be massive bearish divergences for small caps. We've been a little more constructive on small caps based on the technicals. We will get very constructive on small caps when we believe the next cycle is underway. As it stands here today, that's not our base case, but we're open to all possibilities, and of course we'll keep you posted. So lastly, we'll look at yields and the dollar. Yields right here. This trend should be a serious headwind for stocks. Clearly it's not today. And bonds are bouncing around. This is the yield on the 10-year Treasury, but you can see that from that top right there, we look bullish here on the MACD, somewhat neutral, maybe a little bearish on the RSI, but yeah, so stocks came down for a few days, and today they're rallying kind of in the face of this particular chart. Although again, bond yields are a little bit soft today, which is interesting because we had a good jobless claims number. And then the dollar trading lower actually would be a tailwind for stocks, and that's what we've been seeing here lately, although we got a little bounce here so far today, but you can see the trend has been lower. Now this is a pretty definite looking falling wedge pattern, which ultimately is a bullish pattern by itself, but we need to see confirmation in the momentum, and we're not getting that right here. So if the dollar were to continue to decline, that is a tailwind for stocks. Now, if yields continue to rise, the dollar is trading very sensitively to yields. Despite what you see here the last few days, you'll see the dollar turn back around, and that would be a headwind for stocks. So, folks, kind of all over the place. Again, the setup looked really bearish going into this. Applied volatility indicators, the technicals looked very sketchy. But as I pointed out in the midweek, that NVIDIA chart has been one that has, of late, over the last several months to a year, has defied the technicals when they come out and just blow the socks off of the street with their earnings announcements. It's quite remarkable what they've been able to do quarter after quarter of late. These kinds of things, historically, typically aren't sustainable. You can get into the whole argument. I've listened to both sides of the argument this morning in terms of what AI brings and what AI doesn't bring, and what the perception is versus what reality will be. That NVIDIA chart, as I said, and I'm just speaking for myself, is not something that I would be chasing right here, but I certainly sympathize with anyone who does. If it's a bubble, that's fine. Bubbles can go on until they don't, and when they don't, it tends to be very painful. But for now, it's game on for AI, and for the folks who want to pile into that space or are suffering greatly from the fear of missing out, are certainly jumping on board as I speak at you here this morning. Just because things are moving so quickly, one last look at breadth. Now, the Dow, even though it's still up over 200 points, half of its members are down. Now we're looking at about 40% of the S&P is down, and still better than half of the NASDAQ, which is up 2.2%, are still down. So not what you want to see if you are a bull looking for a durable market rally right here. Now, if these stocks that aren't doing anything or are underperforming can start catching up, then that makes for a durable rally. So we'll be watching for that and reporting to you as we go. Thank you, folks, as always, for watching and listening. Next up, over the next day or three, will be your economic update. Take care. Bye-bye.